Anytime an investment yields 5.4% in this environment, investors ought to be a little bit suspicious. But we've done the due diligence and we think Cedar Fair is actually a pretty good deal, even at that yield. I'm Jack Otter, editor of Barrons.com. I'm here with Jack Howe, a senior editor at the magazine, and we'll start on a positive note today with this Amusement park company, and I spent all of Sunday chasing 5 7-year-olds around an amusement park, and I know that the dollars, they just fly out of your wallet. You can't control it.
So I hope you know these 7-year-olds.
I do indeed. That was scary. Yes, I know. It's my son and his friends, and boy, do they suck the money away. It's a good business to be in.
Yeah. Well, this company owns regional theme parks, and they're not the big name parks, but they, some of they're discounted versus like a Disney World. You can pay about half price and go there, and so they're popular. I learned something reading this story, that there hasn't been a major new theme park really built in the past couple of decades. There hasn't been growth in capacity, and right now we're seeing a pickup in traffic and ticket sales, and this is a company that's it's benefiting from that. Some of these operators have been able to increase their prices, and they're putting some money into their parks. So it looks like a good opportunity to get some upside on the share price. It's an MLP structure, I believe. Plus, as you said, a juicy dividend yield.
And they have a roller coaster that goes 68 miles per hour.
I don't even do that in a car.
Yeah, that's pretty scary. I'm not going to get on that ride, but if they can make money off it, great. Now, journalists love to talk about other media companies, and so we're going to indulge that right now and talk about Gannett, which is recommended in the magazine, and the shares are up about 2.5% today on that recommendation.
Hey, that's the company that owns USA Today, isn't it?
Exactly, America's newspaper.
But increasingly, it's really a TV company, more so than a newspaper company.
That's the key.
This will be we're reaching the point now where television earnings from television are going to make up more than half of the pie, and it's a cheap stock. I think it was around 11 times earnings. And in television, some of these broadcasters are able to increase the fees they're collecting. It's really a pretty robust business. So this is you get a good cash flow from the newspapers. You're able to invest that, buying up some stations, and so. Our writer here sees 40% upside for the stock.
I think the key is it's priced like a newspaper, but more and more it's becoming a broadcast station, which could get it a 14, 15, 16 multiple. Now, Mom always said not to say, if you have anything negative to say, don't say it at all, but we're going to go there anyway. Barron's wrote a story that's a bit skeptical on AmTrust, an insurance company. It's a dense story. You can't do justice to it in video, but Bill Alpert says the accounting isn't quite right.
Yeah, you got to pack a lunch and stay hydrated while you're making your way through some of the accounting in this story. Insurance is a really tricky business. I mean, when you post earnings as an insurer, you basically have to make some estimates. You're collecting revenue in terms of insurance premiums. You have to make estimates about what future losses are going to be like. And in some cases, you're selling insurance where the losses might not become known for decades down the road. So you can see some difference in opinion here. And our writer talks about AmTrust, and he lays out a case that the revenue that they're booking for premiums is really kind of outsized relative to the capital that they're putting aside right now, and he thinks that there's some important questions to be asked. Let's put it that way. So readers, that's a story where readers will really want to make their way through it.
The market apparently sees something there. The stock is down a little over 4% today.
Yeah, I mean, it's only 11 times earnings, so by that traditional measure, it looks cheap. The question is, what are the earnings really if we don't know what those losses could be down the road, or whether there's enough money put aside for them?
Exactly. Thanks, Jack.
Thanks.